Happy Friday, Brian Manning here with your weekly update. Tons of news this week. Let's get right to it. So, Monday this week we got the PCE, that's the Personal Consumption Expenditure, Federal Reserve's favorite gauge for measuring inflation. We don't look at it as much because it does not include housing or out-of-cost medical expenses, but Federal Reserve loves it. And the core rate for inflation here stayed at 1.7%, so didn't see any changes. Also got data on wages, and income wages in the private sector rose by 3.7%, so really strong wage increase there. So one thing to know is just keep in mind that it only takes about a 1% increase in wages to offset 6% of home appreciation on an annual basis. And that's only because as part of the monthly payment, as wages go up, you only need a percentage of your monthly payment to contribute towards the mortgage payment every month. So it doesn't need to be apples for apples on an increase of wages versus appreciation. So at 3.7% wage increases, it technically supports appreciation in the range of 13 to 15% per year. Not that that's going to continue forever, but certainly still seeing strong income and abilities for home values to increase. Pending home sales, we also got that money this week. Pending home sales up 1.6% month over month. Great report. Clearly still seeing homes selling even after an increase of interest rates, so that's wonderful to see. Tuesday this week, Case-Shiller, a little bit dated, gives us information for the month of November, but on a year-over-year basis, nationally homes appreciated 5.6%, so again, strong data there as well. And then Wednesday, this is first week of the month, so as every first week we get jobs information, so Wednesday, huge jobs day. ADP, largest provider of private payroll in the U.S., had 246,000 job increase in the month of January. Analysts expected 170,000, so really strong number there. Also Wednesday this week we had Federal Reserve speech, and unanimously the board voted not to raise rates. Really interesting. So last year's composition of board members was very much split between doves and hawks. Right now it's very much a dovish board, which means that they're not as in favor of raising rates so quickly. One hawk on the board, and even the one hawk voted not to raise rates right now, so interesting to see. Friday today we got kind of a mixed report on the jobs report. BLS showed that jobs increased by 227,000 for the month of January, which seems really strong. But if you look at what's called the household surveys, that's when just people get called randomly at their homes, there was a loss of 30,000 jobs. So kind of mixed numbers right now for what we got for employment data today. And the unemployment rate worsened as well. So markets are reacting okay. Mortgage rates improving a little bit based off of this, and we'll have to wait and see what happens. I'm around all week and all weekend. If you have any questions, let me know. I'd love to be part of your business. Happy Friday. Have a great day.